take a quick look at a couple of the charts here. This is the S&P. This is a really pretty remarkable advance. Would you agree? This daily chart of the S&P, pretty remarkable move off the weekly bottom of September 27th. Let me show you the weekly chart. And if you listen to our broadcast on Ameritrade, you would know that this week is the week that we think is the top. Even if next week spikes above this week's high, next week shouldn't be able to close above this week's high. Even if this week's high is just nearby, or whether, through the fireworks of the Fed announcement and the unemployment report or the employment report on Friday, whatever and however it works out, we think that there's a very important turn that's likely coming, and we're working on what we think the market would do on the downside under the current set of conditions, the whole thing that the market, is saying at this time. So we're going to be interested to see that. This is the weekly chart. One more time, let's take a quick look at our whole stacked up charts. This is the yearly chart. Pretty impressive, isn't it? This is a pretty amazing piece of work here, this yearly chart. Let's go to semi-annual, and here is the semi-annual, just a little bit more definition. And then you have your quarterly chart, which shows much more, granularity here in the market's pullbacks and so on. This is really, 1, 2, 3, 4, 5, 6, 7 quarters with, better closes each quarter. That's pretty remarkable. It almost kind of looks like the housing market. All of you have, those of you that are owners of homes, you certainly have seen your own home value go up, depending on the location where you live and so on, but you've certainly seen improvements in value. Is there a place somewhere in America where houses aren't going up in value? There might be, but it might be in the middle of nowhere that's happening, where market forces really aren't very much at work. And I don't know all the nowhere places, but for most of us, your home value has gone up, and it probably looks something similar to this, to the S&P and so on. So it's just been remarkable that the market is as strong as it is. This is quarterly. Then here's our monthly. This again is a pretty good indication. You see very small, relatively speaking, pullbacks followed by advances and so on. You can't normally just expect a market to just continue and continue and continue, but this market has for 13 years. This is a really remarkable set of conditions that will be looked at for many, many years, that the market had this kind of force in it after all of the advance that we've had since, say, the lows of 1932, right? I mean, that was a long time ago. And let's take a look at that. We have to go to the Dow to see that. So if we're going to see that, then we have to also take a look at the yearly chart in order to see 1932. But let's do that. Now, in 1932, here is, whoops, that's 74. I'm sorry. Let me stretch this up a little bit. This might be 32 right here. This is the low of 1932. You weren't alive, probably, in 1932. Society in 1932 was dramatically different than it is now. Society had a very different worldview. Technology also changes our worldview. We had the beginning of the Industrial Revolution already underway. I can't remember if we had telephones, but we might have already had telephones in 1932. Air conditioning had just been invented a while before that. Very different society, very different people in terms of their worldview, their outlook, but also very much the same as we are in a lot of ways, right? But the market back here made a bottom and has been going up, including all of the sharp declines for what in about 11 years will be 100 years if we did continue to go up. And I'm not suggesting that we will continue to go up. Here is the move down in 09, and here is all the move up since 09, which again is a really remarkable advance. So an incredible force at work all the way from 1932 till now and still expressing itself to the upside. It is almost unfathomable, at least when you think of it in the terms that how I think of it. This is the Dow Jones, not the S&P. This is the big spike down in the Dow coming back to, 18,000, and then right now we're up at 36,000. Now, somebody wrote a book a while back, it was quite a while back, about the Dow going to, I think he might have said 36,000, 35,000, 36,000. And I didn't know what to make of it at the time, honestly. In other words, I didn't know if he knew what he was talking about or if this was just a person, linearly extrapolating where the market was going to go. But as surprising as it might be for the Dow to be at 36,000, the Dow at some point, as long as the country's still here, is going to be at 100,000. And that's after pullbacks and all that. But my point is that these indices that are representative of these numbers that we're seeing are really made to go up, because companies that don't do well, where their star is declining, new companies, they get replaced by new companies whose stars are ascending, and therefore the index is made up of winners. And even though there are natural market corrections, once those are out of the way, the indices are really designed to move up. And this is why I like the idea of everybody owning an index fund, not necessarily at these highs, but when pullbacks happen, you start to buy the fund, particularly if you're lucky to be somewhat younger. And if you were doing that, and let's just say you know really very little about the technical aspects of markets, put that aside. If you just added to your position every quarter some reasonable amount of money that you could afford, and just say, well, that's an investment in your future, I would be completely on board with you doing that. And I'm having my daughter do that, who happens to be 39 years old, and she will be in very good shape if she starts that. But I told her, don't do it right now. Let's wait for a more important correction to get that started. And then you just feed money into it every quarter. You don't have to do analysis, or every 6 months, whatever. And over a long period of time, the markets are going to be in dramatically different positions. But since the nature of those indices is that they're going to be filled with companies that tend to do well, then that will be the case. There can and should be a view of America independent of markets. So as an example, the United States of America could be thought of as its own index. And I do that. And with regard to viewing America in that way, America itself is going to have its advances and declines. And when America is in decline, the indices may not be doing so well for that period of time, but America will hopefully live through those declines and then start to move. The indices will start moving up again. So I really like the idea of you owning, anybody owning index funds. It doesn't have to be the S&P index, which the mid-cap 500, but it could be anything. But as long as it's an index that has, it's an American index where we take out the companies that are not doing so well and replace them by companies that are doing well, then you will do well over time. It's an amazingly easy way to invest. And it does take time, but you have nothing but time. So you're going to be living your life, and at some point the index is just going to be on a tear, and you're going to have continued to have bought into it. And before you know it, you're going to be tremendously ahead later.